the crypto market is slowly bouncing back. And as it bounces back, you do see a ton of new information coming out in the market. Now, it can be confusing in one point if you are not looking at it properly, because some give you like, okay, you don't need a central bank digital currency. But on the other hand, you see central banks are working on central bank digital currency. This particular entire stuff shows you, okay, 60 central banks are working on it, and they are going to come out with their central bank digital currencies. And some of them are going to do this in this financial year, right? And what is happening behind the screen? When you go into the technology side of it, it clearly shows you one stuff. Now, read this slowly. Banks may need to adapt their infrastructure to process CBDC transactions. So you need to be in interoperable platform. Enhance digital apps to introduce CBDC functionality, leveraging existing processes. So you do have existing processes which can actually be easily adapted. Then evolve customer interfaces. So for me, while reading this, I'm like, okay, you need to enable an open, compatible infrastructure or hardware, which is compatible with the central bank digital currency. And there is a US based company which sells software named as Ripple, where it enables banks to do all of this. And I think that's going to be a huge success as you look at the further steps, because the next steps here is literally interesting. Now, the other side of this, when an institution like Circle coming out and saying, okay, you really don't need a central bank digital currency, it goes back to like, okay, what are they doing? Okay, what's their business model? If this one comes out, are they being hit hard? You need to look at both the sides before you decide something huge, right? Because right now, on different front, you are looking at disruptions. And as you see these disruptions, one thing is actually completely sure. The bigger economies, which are going to be the biggest economy in next 2-3 years, China, India, these countries with a lot of demographic bullets, they're going to lead. And right now, if you look at this, they are like, okay, we are going to do this in this financial year. And it's not going to be one step. And why this gets so interesting? Because for me, when I'm looking at this entire structure, this US-based company is going to expand its workforce in India. Now, it's not like Ripple did not have any partnerships in India. 2 years, 3 years back, we have directly listened from Ashish Birla that 50% of the banks are in the pipeline. Now, that's 2-3 years back. After this 3 years, with the level of adoption which we see for Ripple, then they go doubling down inside this country at a time when the central bank is about to roll out their central bank digital currency slowly. That says a lot. This market is going to be huge. Now, inside this market, yes, I do agree, you have issues like this. At first, it was like, Luna comes out, makes a lot of people just lunatics and takes their money. Now, this one is like, okay, we are decentralized, but we'll have to halt this every now and then to solve these issues. Now, what happens? When these happens on the one side, the network which works fine get people coming in. People will be like, okay, if you are in those platforms, you're like, okay, why would I just use that one, right? That's a huge opportunity for you. And that's why I say when a company like Ripple is building on these, you get to say, okay, this is literally going to happen. Now, when all of this happens, understand on the outside economy, not the crypto economy, the outside economy, you are expecting the inflation to slow down because the central bank's starting to tighten. Fine. But this comes out from the BlackRock CEO, which kind of goes back to the World Economic Forum. Then again goes back to the conspiracy theories. But you get my point. Now, with all of this happening on one side, with this happening towards the crypto, meaning, when central bank digital currencies come, your stable coin requirement would be going lower. Fine, we'll have to see how the stable coins and CBDCs get along, but most likely people will still want to use stable coins over the central bank digital currencies because mostly privacy concerns. You don't really want to give all of your information to the governments. They already have it done, and most of the human beings would agree on this point. Whereas you'll go look at like, okay, let me go through USDC, let me go through USDT. Now these are like just one company doing that. But if in different countries, banks can literally print money, right? Now, crypto market is bouncing back. Now, as it bounces back, you do see a lot of opportunities popping up, right? You just go look at like, okay, how many of these coins are actually doing wonders? How many of these coins are actually breaking through the resistance? So as you go through this, you see some of these like, okay, they are running 20%, they are running 30% a day. And why is that they are running like that? You had a trend line support, say especially for this one, golem, and then you have a horizontal resistance. And the RSI was showing, okay, I'm at that area where I'm gonna break. And if you are breaking, your measured move was like 50%, great. And the next one is like 160%. Fine. What happened? Boom. It just broke higher. Now, as you go look at the market, you are like, okay, it hit that level and it corrected back down. So that means you are starting to trend higher. Now, you look at this and it's going to correct back down, make a higher, low pattern. If you're entering at the top, you miss that. That's why you actually need to know where your target is, where the next resistance is, so that you don't jump into that green candle and get stuck there. Now, this happens in short term, medium term, long term. So it depends on what type of investor you are. But it really doesn't matter whether you are a short to medium term investor, medium to long term investor, or a long term investor, because you get everything you needed here. So welcome to the Scientific Investor family, where we discuss crypto and science behind investing. And when I say that, I do mean that. You look at this particular video here where we explain how things evolve in different patterns, right? We actually talked about that in detail. And as we went through that, we explained, okay, market is showing you different possibilities that it may literally come back and do that in different assets. So now, say this is XRP, you look at the trend, okay, that's long-term trend line. You are coming lower. Each time you touch that, you have kind of an instant reversal. You don't spend too much time there. Fine, you zoom in to see what's happening there right now. You have a long wick candle, then going to retest the bottom, then you are getting an inverted hammer. Now, this is XRP, right? So now we are zooming even in to understand, okay, what's happening. Then from that candlestick pattern, you go to the actual pattern on a daily, and you get like this. Okay, you're breaking higher, you're coming back to retest that. Now, is it just happening in XRP? No, it's not. If you're going to look at BTC, you get the same day. It's breaking higher, it's coming back, retesting and bouncing. Now, this one you can either say, okay, XRP is correlated to Bitcoin or Bitcoin is correlated to XRP. It's generally the crypto market showing you this signal. The long-term wick here in this weekly shows you the ability of buyers coming inside this particular range. So for them, that's a huge buying range. Now, this is one of the reasons why we talked about this in detail. You see these longer shadows, you see how it actually plays out. And then in this video, we actually talked about, literally how this actually plays out in the market, right? Not just the textbook pattern, but how it plays out in the market. And that's where you get like, okay, you get this bounce, you may bounce up, but again, you are going to come back to the downside, and then you get an engulfing candle or another one. Now, it definitely depends on whether it's happening on a short time frame or long. Like I say, like this one, which is on a weekly, gives you more information that this is going to happen without much of a inconsistencies, right? When you go zoom in, you are going to have a bit more uncertainties associated because you are now zoomed in, right? So looking at these opportunities, you decide whether you are in a bear market, whether you are in a bull market. Now, it's completely dependent. If you are there for the market for a year and the market happens to be correcting for 1 year, that's a bear market for you. But you are there for 5 years and it's like 2 years of downside and then next 3 years to the upside, fine. You're actually accumulating. But right now, what you are getting is something which happens in crypto market every now and then in these wave structures. Let me explain. So you may actually ask, like, okay, we've been moving to the downside for a very long time. Agreed. No one is denying that. But if you consider this movement to the downside in last cycle was like 200 days to the downside after your rally of 140 days. So say 140 days to the upside and then you go down 200 days. So now if you actually look at this crypto market breakthrough here and then take your account here, it's like, okay, we've gone up for a year. So if you put that same math into this cycle, you're most likely saying, okay, it should be like 400, 450 days, right? Now you're coming here and you're like, okay, it's 415 days, close to that. I get something. Okay, we are somewhere close to the bottom. We may get a bounce to the upside and that can be going to retest its moving average. Now, this is just one coin, right? If you go back to a lot of different coins which has been there in different market cycles, it allows you to learn. Say, if you look at the entire market cycle from the bottom till the top, say that's 763 days. Fine. How much of it was in wave 1 and its correction? 420. What does that actually mean? Next 300 days, you literally had your wave 2, its correction, and wave 3 before you actually went into a bear market. So just what you can easily learn in short words is like, okay, you have big 2 corrections in every cycle with consolidation. So if you look at this, you're kind of like, okay, 70% correction there, and here on the wave 1 correction, 80% of correction. In this cycle, did you actually get another 80% correction like this? Now you're like 95 in this particular asset. Say average in the crypto market, you have like 80%. So that's something new which you are getting. And a lot of assets show you this possibility that they are going into the next wave structure. And that's why when you look at XRP, it's like the RSI is at the bottom from a very long time. Whenever it reaches to this particular level, that's a huge buy signal from RSI. Then you look at the MACD, whether it's, going through that area where the difference between 2 lines is getting widened and it's slowing down, it shows you a bottom. Now, let me explain again. You look at this volume to the downside and this one, it's comparatively lower. So the volume pushed to the downside in your moving average, convergence and divergence shows you, okay, there is a huge divergence. And then the RSI shows I'm oversold. Now the price is at a long-term support. Anyone with the basic cognitive ability would be like, okay, for me, that's like, that's a good buy opportunity if I have some dry powder. If not, I'm staying out of the market. Why? Because the market consists of a lot of different assets. Some of them may go down, right? So while looking at the Bitcoin dominance, you are like, okay, it's been trending lower from a long period of time, right? Why? Because that's like the first model, the ancient crypto technology, which you can consider like a commodity as of now. Now, XRP is not one. It's actually a utility asset or a digital asset. Now, I know there is a speculation like it can be stable coin at $10, $100, $1,000. But maybe it's just me, but my question is, if you think that way, go look at the white paper of XRP. Do you actually see a burn rate? Which means it's an asset designed as an appreciating asset. Each transaction reduces your supply. Now, I know what you're going to respond to this. You would say there is a ton of escrow, so whatever is being burned can be put back into the system, maintaining that stable coin mannerism. But again, if you are doing that as a centralized organization to control the price of an asset, that's a security. If you work on this like this manner, that's changing your white paper. Like, Bitcoin white paper states it's a peer-to-peer payment network. But if you try to send $10 now, you'll understand the pain behind that. You try to buy a coffee and you'll understand the pain behind that. Rather, you go to just use your dollars because that's solving much better issue. But the problem is, if you hold dollar, your purchasing power is getting hit every month. The inflation is super high. So you want to be in another asset which is volatile, which will remain volatile, but the upside covers all the downside and gives you the profit. So now coming back to this, okay, if Bitcoin dominance is breaking this particular line here, that shows the market is actually going for this particular rally. Now, as it tests the moving average, which would be around 50%, you're going to see huge opportunities in the market. Now, why do I say that? Because on the other side of this, when Bitcoin is reaching towards the resistance level, all coins are reaching towards the support level. If you are on the same page, you now know, okay, there is going to be massive upside here. You go down, you wick lower to test your moving average and the support line, and then you go back up. Now we are doing that from some time, and if we repeat that, we are going to see massive fluctuation to the upside. This massive fluctuation to the upside, when it actually comes to the market, you're first zooming in to make sure that it is happening. What you are going to do there is simply look at it zoomed in, not 1 hour, 2 hour chart, at least on a daily chart. Look at the pattern and you're like, okay, whether it's breaking to the downside or to the upside. Because if this happens to break to the downside on the short term, because the BTC dominance is breaking to the upside, then that definitely means that you may actually have a little bit more downside in a lot of different assets. Now, if you are getting bad news like the network is going to be halted, there is a bug, investors are literally going to move out of that for the short term, expecting volatility to the downside. Or, people are looking, if they are really long-term investor in that particular project, believing that it's going to survive, then they may become buyers, but not at this level, right? So again, back to the price action, it definitely actually shows you two things here. One, long wick candles with ending on a inverted hammer. Now it's a weekly candle and we are on a Friday here for me, so you still have a couple of days before you actually close this candle. Great. So in 2 days time, if you manage to stay above this range, that's actually great, because right now if you go look at a daily candle, we already have a daily candle ending, and if this particular daily candle ends about $30,000, that kind of gives the market something different, right? Instead of the corrective thought process, the market is saying, okay, I'm bouncing, and I'm bouncing from a daily pattern which just broke to the upside after a retest. So now I can literally go test $35,000 to $36,000. Okay, in Bitcoin terms, it's not actually huge. 10-15% move to the upside is not actually huge. But this particular move here in the Bitcoin will end up like this in the altcoin. They may go crazy. If Bitcoin is going to do that over next 1 week or 2 weeks, you may see a lot of different altcoins popping like this here and there. And that's your opportunity. And if you would like to get into those opportunities like this, you can look at the Patreon. The link is given in the description below, where I update most of these breakouts. And you do get calls on the Telegram, breakout calls. Whenever I see a lot of breakouts, I do share that as soon as possible. Because if you're there live and it's your time zone, then you're ready to take care of this one. Like the last one we took care, right? The price actually went nuts and we took the benefit. Why? In this market, you have hundreds of assets. And in your portfolio, it won't just be one asset, right? If you are there in this asset class, which is like 20,000 assets, you're choosing 10, 12 assets at least, based on a top-loaded approach. But if you're trading with 10% of your portfolio for next 1 year with low risk, now low risk doesn't mean zero risk. You still have risk. But knowing what pattern you're entering it, which price you're entering it, and what your target is, helps a lot before you actually take profit. Why? Because once you do that, the price kind of slows down. You see that? You went there, you hit there, and then you're coming back down. If you're a trader, you want to get in, you want to take your profit, you want to get out. Now, that's short-term trading. I personally anticipated this is going to happen in 2 or 3 days, but it just happened in a day, right? So the market can actually give you those surprises, but be ready with your orders. That kind of matches up and reduces your risk knowing those targets. So guys, if you received value for your time, please do hit that like and subscribe button. That supports the channel a lot. And if you want these kind of updates on a regular basis to get into, like say 1K to 100K trade sessions, which we are on now. As the market recovers, we are going to go through different assets, enter, exit, double our money like 7 times, which is from 7 to 2, 4, 8, 16, 32, 64, and 128. So even if you are getting some losses from mid to last points, you're fine. And you're not like looking like 10 years to reach that 1 to 100, right? So that's 100x trying to be achieved in 1.5 years. That's a huge attempt and a challenge. Even if you end up with half of that, that's 50x. So guys, I'll meet you on the next video. Bye for now.